All right, there we go. So again, welcome. Thank you for joining me for August Teams meeting. And I'm going to share a quick little movie. Or not. I love this one. Oops, sorry. Well, I think it's important that everybody realizes all of those things are awesome and all of those things are true. And in today's changing market, we need to rely and lean on each and every one of those things. We need to rely on the heritage, the name of our brand. We need to rely on our incredible marketing. We need to rely on the fact that each and every one of you are local experts, and we have to use our global exposure to help people sell their homes, to let people know that we have the networks and the means to sell their homes in today's market, right? And that's what's going to help us make the difference. So today, we are focused, as always, on elevating all of us, all of the people around us. So I know each and every one of you focus on doing that every day. That's what we here focus on. And I thank you for being part of that journey. And we are artfully uniting extraordinary people with extraordinary homes. That is our goal, and that's how we do it. Be proud to be the 18th largest brokerage in the country, the second largest franchise of Sotheby's in the entire world. Guys, that's huge. Sotheby's did $224 billion of sales last year. That is incredible. And we are the second largest franchise of that. Right? So when you're going to go see a seller and they want to know, can you handle their business? I think you can. I'm just saying, right? We're the second largest Realogy franchise among all of their brands. And we're the fourth largest franchise, no matter what brand you are. So I think that speaks volumes. So without further ado, I'm going to introduce our incredible partners. We have some wonderful people we partner with. And I think the most important thing that we have to realize today more than ever is we are a team, right? We're not just one single solution, we're a full solution. We have working together, we have to see that there's a bigger picture. Part of that picture is helping people buy and sell their homes. And part of that is finding mortgage solutions, right? Part of that is finding insurance solutions, because we know these are all big things. So what I'd love to do is first start with Mr. Mike O'Connor, who is here with Premier Concierge. And I'm just going to stop the share so we can, I don't know, Mike, did you want to share any slides or?
I don't have any slides to share today. I just have some news to provide with you guys today. So thank you, Carrie, for allowing me to speak on this, because I'm sure a lot of you guys have seen in the news recently about 17 carriers are at the threat of being downgraded and will no longer be accepted as a loan backing for Fannie and Freddie. And so this can cause a lot of turmoil in the market, because 17 carriers is a significant amount of carriers that any agent writes business with. And so they did have a solution in place for the time being as to where Citizens is going to be the reinsurer, the secondary reinsurer for these carriers that do get downgraded. You know what that,
Right, go ahead.
what that means is that you know, now Citizens is going to be able to reinsure these carriers on a secondary basis and provide the reinsurance that they need to stay financially stable. And that is a good thing and also a bad thing, because Citizens is also the state-funded last resort for insurers. So that does mean that if anybody were to, let's say there's the wind blows hard in September, okay, and we have a lot of claims that are happening, that does mean that policyholders are now going to be assessed And what that means is that they're going to assess their policyholders and take funds from Citizens policyholders as well as Florida policyholders. So it could be a good scenario, it could be a bad scenario. We'll see how we have to play out. And there's also been recent news that came out that 3 carriers have been downgraded, have received their downgrade from Demotech. Those 3 carriers are United Property and Casualty, Federated National, and Weston Insurance. And I just want to reassure you guys that those 3 carriers are not within our carrier panel that we write business with. Gallagher has something that's called standards of excellence with each carrier that we are appointed with. So even though they may be financially rated with somebody, they have to pass our guidelines for financial stability to make sure that we place our clients with great carriers. And so those 3 carriers that were downgraded are not in our carrier panel, will not affect the ability for us to obtain insurance for you guys. There has been some recent changes in the market, and there are a few carriers that have downgraded their age of roof limits. So we are down to 1 carrier that's not Citizens that are able to take the shingle roof up to 20 years. So that is a significant
That's
benefit
huge.
to us. Yes, it's a significant benefit to us. You just want to make sure that the homes are updated and have the inspections that they need. A wind mitigation inspection is going to be critical for your clients receiving lower insurance because those wind mitigation credits are applied to the policy. So my suggestion to you guys is just get to us early with the request. Make sure that we have enough time to properly address the requests and make sure that these inspections are being completed in a timely manner so we can address things and have them out as soon as possible for your clients.
So that's great. So just to make sure that I'm understanding, if we have wind mitigation, if the home is relatively updated, then there is a chance that if the home is a shingle roof, does it have to be architectural shingles? Is that a requirement?
That is going to be a benefit towards them, yes, because the 3-tab shingle does have lower requirements. So they'll take them up to 15 years now as the max with all carriers.
Okay. So an architectural shingle roof, you could go up to 20 years and still get insurance. That's awesome.
That
That's
is
great, guys.
correct.
That is amazing. So even if, guys, you're on the sell side, that is something that we can offer and put into the MLS that there is this company that will offer that. We can get that quote from Mike and put that in there as something that you can put into Realtor Remarks that this company will offer this to buyers. Their buyer can choose it or not, but then they can't use that against us when it's time to say we can't find insurance. Oh, really? Because this insurance company will give it, right? So thank you. That is awesome.
That's right. That's right. And another thing that I've been working with a lot of agents is that if the roof is older than 20 years or still have trouble obtaining insurance within that 15 to 20-year period, is we've been having the clients obtain a work order for a roof replacement prior to the sale of the home. And we've been using that to negotiate with carriers as if we write the policy with a new roof. And once the roof is replaced, we will then get a new wind mitigation inspection completed by the roofing company and apply that to the policy for a lower premium. So we do have solutions in hand for that as well.
Great. So do they start with a higher policy premium and then once the roof has been completed, then they lower the policy premium? Is that how that works?
That's correct, because we wouldn't have the wind mitigation inspection for the new roof until it's installed.
Gotcha. Is there a time frame that the roof has to be installed by?
30 days.
30 days. Okay. But it can be paid for by the new buyer, correct?
That is correct.
Very nice, guys. Love that. What about in a tile roof situation? How long is that? Can you find policies written up to?
I've been seeing that being capped at 20 years as well, and to be quite honest, I was
Really?
quite surprised to see that. Yes. And the reason being for that is everyone knows the litigation that's going on with roofing companies and the significant losses that insurance carriers are facing. I've read an article that within the last 5 years, there has been no insurance carrier in the state of Florida that has operated at a profit. And so this roof litigation is a huge problem in our state. And as everyone knows, tile roofs are much more expensive than shingle roofs are. So that's the reason why carriers have been capping them at 20 years as well. We are able to negotiate, especially if we do have a 4-point inspection stating the life of the roof to be over 5 years or at least over 3 years, which typically with a tile roof, I mean, it's quite crazy because I remember 2 years ago I wrote a policy for a 50-year-old tile roof. So it's
Right.
changed significantly. And so if you have that documentation stating the life expectancy is longer than 3 to 5 years, then we do have a leg to stand on to negotiate with these carriers.
So what if the owner, the seller has this, inspection that says that it's got a 3 to 5 year longer expectancy for the roof? Can we use that and put that in our realtor remarks that the buyer then can use when they're shopping for their
As long as it's been completed within the last year.
Okay. That's good. That's fair. Great.
Mhm.
That is terrific. Does anybody have questions for Mike? Because these are all really important things, especially as we head into hurricane season. I mean, we're in hurricane season, right? But let's be honest, it's getting worse, right? This is like the big time when it starts really getting into, we really feel hurricane season, let's put it that way, right? Here in Orlando. Anybody
right.
have any questions for Mike?
I actually do, Carrie.
Sure.
So in regards to the roofing, so you're saying that that you can insure the roof, they have to do it within the 30-day period. Is that right?
That's correct. If the roof is going to be difficult to obtain insurance in the first place, then that's the best way for us to obtain insurance, is to have the roof replaced after closing, but have that work order prior to closing to be able to prove to the carrier that we're getting it replaced.
Okay, that's what I was going to get clarification on. The actual starting of the roof construction cannot happen until after we close.
Well, if the sellers don't mind that starting prior to closing, then that's completely fine. But typically the situation that we see is that the seller do not want to pay for the roof or begin work prior to the sale of the home.
Okay.
And you need to be careful, Carrie. You don't want the work to start before the mortgage closes if they're getting a mortgage too. You don't want to have open permits and a roof half off and stuff like that. So.
Mhm.
Okay. Okay, that's what I thought, Maria. Thank you.
And I think it really depends, Kara, on who's paying, right?
Yeah.
Is the buyer paying? Is the seller paying? If the seller's going to pay, then go ahead and get the roof on, obviously, before it closes, right? But if the buyer's paying, then this is a great solution. Then the seller doesn't have to take any liability, doesn't have to pull any permits, close the thing, make it clean, and the buyer can do it after it closes, right?
Okay. Thank you.
Thank
Anybody
you.
else have any questions? I mean, I think this is great information. I mean, shingle roofs that you can get insurance up to 20 years old is fabulous. I'm shocked about the tile roofs, but it does make sense. It's all about risk assessment for the insurance companies. We know that, right? It has nothing to do with actual wear and tear of the roof.
So Mike,
Hey, Maria.
tile roof is
Maria.
over 20, yeah,
Maria, can you hear me?
I can.
Okay, I'm sorry. My name's Rufus Dowell. I'm a Gallagher producer in Jacksonville, Florida. And I would just offer, there's one other additional thought on that. I mean, Mike, primarily, I'm thinking working with mid-market carriers. And 85% of my clients are with Chubb up here in Northeast Florida. Well, actually all over the state, but primarily we're in Jacksonville. So Chubb doesn't really care too much about the age of the roof. I mean, they don't, they may require a wind mitigation report, but that's only to substantiate hurricane clips, the deck thickness, and whether it's a hip or gable roof, et cetera. So if you've got a client that meets the Chubb underwriting guidelines, you don't have to worry about that. And that's typically a house that's, well, it varies from wherever the location is, but typically it's $1 million or higher on the replacement value. And then, of course, we have to package. It has to be packaged, so you got to have an automobile or an umbrella or valuable article. So I don't know the range of values of houses you guys are selling, but Chubb is a wonderful option for some people, no question about it, because you don't run into those issues with the age of the roof or electrical panels or stuff like that.
So you guys know, Rufus handles homes insurance above. What's your price point? We do have homes here. We're listed one over 37 million, but that's an equestrian property. But we do have high-end homes here as well. Mike, your price point is typically what?
Below 2 million on the sale value.
So anything above that would be Rufus. So just
That
so
is
you know,
correct.
we have you covered for everything.
So quick question, Mike. So when you're saying a tile roof that's, let's say it's 21 years old, even if you were to get something that said that the life expectancy is 5 years, doesn't matter. They're not going to write it, right?
Well, there are carriers that go up to 25 years on a tile roof as well. It's been a difficult situation to say the least, considering these guidelines are changing every week with each carrier when it comes to the age of the roof. I wouldn't see an issue getting a policy for a tile roof that's lower than, or that's old, that's 25 years. Let's say it's between 20 and 25 years. It just really depends on the location as well. There's a lot of carriers that have capacity limits in certain locations, and we do see that a lot in Orlando, unfortunately, due to the claims activity taking place in that area. So we would, those older roofs have to be taken on a case by case basis as well. When we have a carrier that's able to take a roof, shingle roof for 20 years, the risk profile of that house may not meet the guidelines of the carrier altogether. So it is, I would think of those older roof situations as a case by case basis instead of a one-stop solution.
So essentially here in Eagle Creek, where your homes are probably tile roofs, maybe 1.5 to 2.5. So that's kind of right in that sweet spot, right? And they're going to be around 20-year-old roofs. Those are going to be case by case. And that's your 32832.
If those people buying houses are, that is kind of in Chubb's wheelhouse. We're talking Orlando.
Okay.
So,
Yeah.
But if they're willing to look at packaging the cars and the umbrella and maybe valuable articles with the house, that's in Chubb's wheelhouse. We just have to, whether or not it's going to make good sense for the buyer to do all that obviously depends upon their situation, whether, what they're paying for the cars and the umbrella, and whether it's worth going through jumping through those hoops to try to get insurance on the house, which is what they're focused on when they're buying a home. But in many cases, that's a great solution. And I would almost tell you, any house that's got a replacement value of $3 or $4 or $5 million, $6 million, $7 million, ought to be with Chubb, if it makes sense, if it makes economic sense. Because at claim time, they would never be disappointed. I can assure you that.
That's right.
Well, thank you guys so much. Does anybody else have a question here for Mike or Rufus?
I have a quick question. What about metal roofs?
Metal roofs kind of follow the same guidelines as tile roofs.
So about 20
again,
years.
Chubb, and again, Chubb, they don't really distinguish. I think their philosophy is simply that if somebody's buying a $2 or $3 or $4 million house, they're not going to buy a house with a leaky roof. So that's kind of their philosophy.
Great. Well, thank you both so much. We appreciate having you,
Thank you.
and we'll look forward to seeing you next month. Thank you guys. Appreciate it.
Thank you for
Thank you
having
very
us.
much. All right.
And
You guys
remember,
go sell a
guys,
lot of houses.
We will, and there's 3 ways
Take
to
care.
get quotes. You can contact them online for a quick quote. You can give them a call, or what was that third way? You could call them. You can go online for a quote, or the third way was?
There's an email inbox as well.
There's an email inbox too. Okay. Thank you so much. Appreciate you guys.
Take care.
Okay, and
Thank you.
Words from Mr. Tom Sorrentino and Maria Smith. So share with us a little bit about what's happening in this crazy mortgage moment.
You want to start, sir? All right, I'll go first. First of all, I just wanted to tell y'all how fortunate you are to work for such a fabulous company, because I've had 2 people, one yesterday and one on Monday, that do not work for Premier, calling me freaking out. Realtors I've known for 20 years that don't have any business, either have nothing in the pipeline for August or maybe one listing, and they're flipping out. And these are people that are producers.
Send them my way.
Well, what I was going to say is, if you guys are not taking advantage of the digital farming, that's stuff that nobody else has. Carrie's teaching classes on it all the time. It's huge. You're getting great results. Sotheby's has things that nobody else has. And if you're using the marketing and using Carrie to her potential, I know she has a full plate, but guys, it's a huge difference, night and day, between what you guys have, the level of service that you have, the marketing that you have. Use it, and use it while it's a little slower. Get in there, get working on it. Take the time while it's a little slower to build your business and get geared up for next year. It's already The stuff you're working on now is gonna be your closings for the end of the year and for 2023. So all I'm saying is, you guys work for the best company. You need to use the resources and keep your business going, because you have the best people with Carrie and all of you guys, your peers. I mean, you guys have a wealth of knowledge and you can call any of each other, and everyone is always team, collaborating, working. So just take advantage of it. That's all I can say. Y'all are lucky.
I didn't even pay her to say that. And they brought us food and the drinks.
And then Tom's gonna talk about the market and how we're seeing a nice little dip in rates. Go ahead, Tom.
Yeah, so Cindy's gonna be sending out an email, I don't know if she has enough, like Corey, for a chart that looks like this, but as you can see, there's, the market has, this chart is inverse to rates. So as the price goes down in the mortgage-backed securities, the rates go up. And they've been going up for about a year now. And thankfully, we've seen, it looks like the market is establishing a low point. So meeting a high point in rates. So the great thing about South State is throughout this entire process, we've really kept our 10-1 arm in check. It's been 4.25 on a professional jumbo for the last month now. So we have some great portfolio products. The 10-1 arm is excellent. The standard under 647 is 10% down with no PMI, 4.75 interest rate, and then the professional jumbo is 4.25. Again, 10% down up to 1.25 million with no PMI. So that's really strong. I want to also point out something I've seen a couple contracts in the last month. And we have something that's very unique, and that is the ability. I have a couple clients that have done 1031 exchanges, and they own the property in LLC. Well, they have to do a like-kind exchange from the LLC, and they have to buy it entitled into the LLC. So South State Bank does give us the ability to title in the LLC, which I don't know of any other banks doing that. There might be some small community banks here and there, but I don't know. It seems like all the community banks are getting eaten up.
Yeah.
Of late. So that's all I have.
Well, that's all good stuff.
And the rates are, even on a 30-year fixed, I locked someone yesterday at 5.125. So it's back down, because we were pushing 6 there not a month ago. So it seems to be settling. So that's great news. I hope that it continues that trend, but it's been kind of nice because it was getting a little scary, and I think people were getting priced out payment wise. And it seems to be tempering a little. So that's great news from our perspective.
And I have one more thing to say. Not only thank you so much for bringing the mimosas and all the food, but also we have wonderful partners, guys, and they're here for us. And if you have questions about anything, call them. We have some great programs for those of you who missed the wonderful Lunch and Learn that Tom did. We have the terrific program that they have. That's a portfolio program with the census tract, where you can still have customers that don't have to be first-time home buyers. It could be a seller who sold their home yesterday that today qualify to purchase a home, no money down, no PMI, in areas like Lake Nona. These are things that we need to be talking about because nobody else has this. This is a portfolio program. This is things that make us unique and special. We always talk about value proposition, right? This is a value you could bring to customers that will help you get business, will help you get listings, will help you stand out in this marketplace, which is already going to be easy to do because nobody else has what we offer. So all of these things you need to be putting together in a nice little package with a nice bow on it and be talking short, sweet, concise, but in a whole solution, right? Not just one little thing. We need to be giving them a whole solution. Okay, does that make sense? All right, back onto our meeting, sharing screen. Okay, so back to play from current slide. No, that was wrong. Okay, there we go. All right, we've got all sorts of good stuff, and now it's just blank. So maybe not. Okay, there it is. Oh, we're gonna add it Dawn again. All right, so we are going to hit, there we go. What's new with Sotheby's? Well, did you guys know that we are now in 81 countries? So we are growing and growing strong. We are now in Serbia, Ireland, and Egypt. We have one of the strongest referral networks out there. if not the strongest, I'm sure. And we've closed transactions with an average sales price of more than 1.3 million. So we're not just giving you a huge, wonderful opportunity of terrific Sotheby's and referrals, and this is just Sotheby's to Sotheby's, an average sales price of 1.3. I don't know about you guys, but that's a pretty nice average sales price. So these are exciting things. That's with Sotheby's. Premier Sotheby's, we are in 84 locations. That's pretty exciting. Our average sales price within the company is 1,107,991. I can't even say it, 1.1791. I didn't even drink my mimosa yet, my gosh. But that is within our locations, within Premier Sotheby's. So not far off from Sotheby's as a branch, right? That's pretty exciting. This is our stats currently year to date from Central Florida. So this is our average sales price, $683,798. That is up from last year from $578. Look at that. That is a huge increase. Our sales volume is 644,137 compared to last year, 633. And what is helping us, because our listings are down a little bit. We're 703 compared to 737 last year. But it's our average sales price that is helping us. That's what's really keeping us going. Our closed transactions are down a little bit. They're 942 compared to 1,095. But again,
same time last year.
Yep, same time. So we're 2% above last year. But again, the differential, which you're going to see is what's going to really save everything in Central Florida for sure, is the average sales price for sure, because that is really up everywhere. Now, what's new with Sotheby's? Has anybody downloaded your My Premier app? All right, you can download it right now. It's best to download from that link that they sent you, because I tried to find it in the App Store and I just couldn't find it. Didn't anybody find it in the App Store? I don't know if you find it in the App Store, good for you, but I did it from the link. What's really cool is right from your app, you can contact your customers directly. You can email them, you can text them, you can call them. You can also see who's engaging from your listing alerts. So what I love about the listing alerts, and you guys all know this if you've done any training with me at all on listing alerts, is that you can text. The listing alert that you set up is not only much nicer than the ones you do from the MLS, but it will text to their phone number. So nice. And then right from your phone, you could see if they're engaging with any of the listings immediately. That's really cool. So you can text them and say, hey, I saw you really like this listing. Do you want to set up a showing? That is a really cool feature. The other neat thing is, well, this is why I need to get on Teresa's listing. Thank you, Teresa. Is that if you have a listing, you can do an open house registration right from your app. This is a really cool feature. So you can see the listing, if you guys can see this, right from your phone. The app will actually let people register. Either they can type in their information, or better yet, they can just scan the QR code. That is so cool. And they could do it right from their phone, and they could see all the information about the home. They could see all the pictures. And then now you have their information because they scanned it right in from the QR code, and they could put their information in.
So when you're at the open house, you hand them your phone and they put their name in?
Well, you can put out the little scan, right?
Okay,
The QR code, they scan that and then register. Now, why would they register? Because someone like Wonderful Marie or Tom has joined them, and they register for a free gift card to blah, 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 right? Because no one's going to ever bother registering if they don't get something for free. Let's be honest. They got to register to win something, right? That's the beauty of the open. Why else are they registering? They don't ever want to register for an open house. They got to get something for free, right? But you got to entice them to do so. But when they register to win their chance at a free gift card to wherever, then that's when you get their information. But this is a really cool, and by doing that, they get all the information on the house. They can see everything about it. Now, where else are they? They can get right to your website. Now they're on your website. They start looking on your website. Now they can start subscribing to information. They start looking for showing. They start seeing other homes they like. Now you've kind of captured them. You've got them on your website. So that's what's really cool about the app. So I really liked that feature. The other really cool thing that I did that was recommended by Miss Jules, she said to me, Carrie, if only you would create a template for what you wanted to see in your listing. So I created a template, and I call it Carrie's Teaching Listing Folder, because we're going to take a quick little peek at it. And we're going to go over here. Can everybody see? Yeah. we're gonna go over here into my dot loop. I'm gonna make this screen bigger. And it's in both, you should see Carrie's teaching listing. That's what I call it. Oh, I gotta sign in again. All right, you go into the listing, and in there I have notes for you in case you are like ever wondering, what would Carrie want me to fill in here? Now, if you don't need this, don't ever open this. But for those of you who ever wonder, what would Carrie want here? You'll see under the date, post date it. Don't forget to do that, because this is where we want you to post date it, because the back of the agreement states, see, start the date pushed out at least a week or so to accommodate for pictures. The verbiage on the back, make sure you have a valid agreement. See, I tell you all of this right here. This should be 6 months or longer. Tell you on the property, make sure to ask about things like the Ring doorbell, video surveillance, solar lights, like I just kind of give you little hints. FHA, 420-680 is the FHA loan limits in Orange County. Only select FHA if it makes sense. I see people selecting FHA in a home that's 980. Why? Okay, we look like an idiot if we select FHA, the home's 980. Why would you have, there's no FHA buyers going to qualify. Okay, so I have stuff in here like that. I have in here, for example, if you're moving along, the commissions, but also termination date. People don't understand what this protection period is. I give you an idea of what that's about. Also, why I suggest that you keep all of these the same. So I have in here what this cancellation is for. So I have some stuff in here that maybe would be helpful for you. And that was a suggestion by Miss Jules. So I hope you like that in case you need it. There it is. And play from current slide. Okay,
You
so that's
actually
in there for
listen,
you.
huh?
Only from time to time. Was that what you were hoping for, Miss Jules?
Yes, and thank you.
You're welcome. And if you want, I'll do the same with contracts. Okay. Mhm.
Quick question about
Sure.
FHA.
Yes.
So typically people do FHA when they don't have a whole lot of money down.
Yes.
Let's say they do have 20%.
Mhm. But if they do it because they don't have credit.
Their credit's
But,
usually less.
but the interest rates are so much better on FHA.
But you're paying mortgage insurance. for the
Yes.
life
No,
of
if
it.
you have 20% down.
You still pay
for 11
mortgage
years.
insurance.
You still pay for 11 years.
Yes. FHA
FHA
is,
sucks.
it's
You only do
terrible.
that as a last resort.
you're only FHA for two reasons. You don't have money or you don't have credit. It's one or the other. It's subpar.
No, you still pay PMI.
Yeah,
And you pay
let's
for
be
11
honest.
years. You can't get out of it, and you pay upfront 1 3/4 points.
Yeah, let's be honest.
So
If you're
that
going
rate
FHA,
It's
there's a
enticing,
reason.
but once you do the numbers and you roll into PMI, you're better off.
Yeah, we all know when you're FHA, there's a reason. People never do that by choice. No. Okay, so but good question. Thank you for asking. That was excellent. So here's another one, guys. We have new referral forms, and they say new referral form. So you'll see it. This referral form is for buyers and for sellers, because we had too much confusion. Nobody knew, is this for buyers? Is this for sellers? Is this internal? Is this external? One form for all. Just use this form. If you need a referral, internal, external, external, blah, 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 doesn't matter. Just use this form for everything. It's the newest form. It's the latest and the greatest. And it is just the referral contract, and fee agreement right here. See, it's right in the piece or documents. Everybody like that? Questions on that? Okay, great. Now, I also started a new campaign to help each and every one of you, and me too, because why not? And it's going to help showcase you. I'm doing a Meet the Team. So here's one I did for Miss Tasha, dedicated to elevating the lives of the people around us. That's what we're all focused on. I'm focusing on something about you. So I want each of us to figure out what records we could talk about. So for Tasha, she joined Premier in 2018. She went from 13 million, did you guys know that, in 2017 to 47.7 million closed sales volume in 2021. I don't know about you, but that's pretty impressive. She closed the highest equestrian property in 2020, the Jockey Club, for 12.9, and currently has the highest listed equestrian property in Central Florida for 37 million. So then it says, I cut off the bottom, it says why she joined Premier Sotheby's. And she says she joined because she wanted to work for a broker who believed in her. She wanted to grow her global exposure and to be the Of course, I don't have it on there because I cut it off, but it's on my Facebook page. So, but I want you to tell me why you joined Premier Sotheby's, what it's done for your business, and any piece of advice you can give somebody. That's what I need from you. I will help come up with what records you have done, and we will create a great social post for you. You can e-blast this out. This is a great way for you to not talk about yourself, but let me talk about you, right? Because you lead from gratitude, or let me lead about you. Right? Other people could talk about you, or you can lead from gratitude, but you can't talk about yourself because that just looks bad, right? We all agree with that. So then I did one for Jules. Let's look at Miss Jules. And she started with Premier Sotheby's International Realty. By the end of 2020, she already has increased her average sales price by 150%, with multiple listings sold just under 2 million. I think that's pretty important, right? Now, I cut off your quote too, Jules. You want to share what your quote was? It was really spectacular.
I could, if I remember.
It's on my Facebook page too. It was really good. It was about helping our customers with the ultimate customer service, white glove service.
I joined Premier Sotheby's International Realty to provide customers personalized, legendary white glove luxury service with true global exposure.
Beautiful. That was a mouthful. That was good. I liked it. So these are the things I'm doing for everybody. So if you guys could give me why you joined Premier, I will come up with your stats. We'll get it over to marketing, and then we can get it over to you to see if you like what we've come up with. And then we'll get it out for you. Sound good? Okay. The other thing is yes.
What are the 3 questions? Why you joined,
why you joined Premier, what it's done for your business, or, what you're doing for customers, or, like something like that. And if you want to add like a piece of advice or anything like that. Okay. Sound good? Just send it on over. And here's these digital campaigns. Now, you guys know on my YouTube channel, there's 4 videos about the digital campaign, because to do our digital campaign, you're using from our tools, the neighborhood report, you are using our presentation suite, you are also using Remind, and then of course my latest, well, it's not my latest and greatest because I've been using it for a long time, but Reach, which is that app, which is the SMS thing. And so we've been doing them. We've had some really great success. We've had some interesting ones. And so you can see what we've done. I will take a quick little peek over here. I have Dawn's book, just to give you an idea. We haven't, let's see. Let's go over here. This is what the book looks like. So we do a neighborhood report, right? We take the information out of Remind, we upload the data into Remind, so that into our Reach, so we can text the people. We create these little digital books about the community. We create a hyperlink that will then go to the agent's page of how much the home is worth, of course. This is what we're texting, along with a little introduction, which is very, very brief, and a little snippet about what's happening in that community. Right? And we send that off. Now, some people might say stop. Some people may say a little bit harsher information, but other people actually have asked for listing appointments. So Tony he has 3 listing appointments. Is Tony Tate on? Tony, he was on. He has 3 listing appointments. Elsie Benitez had a listing appointment in Bay Hill for 2.5. Alan Maycumber has over 30 leads he's working. So we've had some really strong successes. Is it a magic bullet? No, nothing is. But guys, this is like the equity letter on steroids, okay? We're taking a snippet of the equity letter and we're not mailing it. We're not handwriting envelopes. We're not throwing in, waiting to see if they get it. It goes direct to them. And if they're interested, they get back to us. And if they're not, we're sending them the really good information about their community, right? What is it? We're not soliciting, right? Because this is not asking them for anything. We're just telling them about their community. And people have actually said, hey, I'm interested in have you come and do a listing presentation for me. And if not, hopefully they're going to see how much their home is worth. Who did I just check the other day? They had 15 leads in there. I don't remember who it was. Carol. Yep, 15 leads she had. So we're getting a lot of people getting some really strong results. It's not a magic bullet. This may be something that, these are sellers are just checking. They may be potentially interested in, so we have to do follow-up, right? But guys, these are real leads. And what did you pay? $5 for reach. That's awesome. For a month, by the way. It's a monthly thing and you can cancel at any time. So you know me, it's free for me, but if I pay for something, it's good. Okay. So this is a really cool thing. So if you have not done it yet, come see me. I will help you set this up. It's easy for me. It may not be as easy for you the first time or the second time, maybe even the third, and that's okay. No judgment, judgment-free zone. That is what I'm here for. This is very simple for me. So I will help you do this. Okay. I am the broker who understands Excel and all these crazy things because I'm a tech weirdo. So I'm happy to help you. All right. So get with me and let's do it. Any questions about this? Because this stuff works. Okay. We good? All right. Nobody's talking. So I'm going to take that as a good thing. So I was at the expo and I had the privilege of sitting with, I don't know if he's a professor, doctor, he's the head of economics over there with UCF, Mr. Snaith there, Dr. Snaith. And he did an excellent presentation. He was the keynote speaker about the economy. And what he talked about was, first of all, the question everybody wants to know, are we in a recession? What does everybody think? We hear all sorts of things. What is a recession? Let's talk about a recession. Is it really factual? What is the actual definition? I mean, you know, there's all sorts of crazy definitions nobody really knows. He actually says they actually call it a real recession like months later. They'll come back and actually say whether it's truly a recession or not. But in his definition, because the GDP has gone and contracted for 2 times, an economist would say, yes, we're in a recession. That's what he would say. However, what he does say is that he says the economy needs to rebalance. This is a good thing. He compared it to penicillin, but not the bubblegum flavor, the kind that was disgusting tasting that you just had to deal with because it made you feel better. And he said that's really where we're at. The economy needs to feel better. It needs to take a little bit of disgusting medicine, and then it will rebalance and feel better. It's like a stomach ache that needs to get a little bit better. And it's okay. It's nothing like we saw back in 2007 when the market tanked and then slowly came back. That was the worst recession since the Great Depression. This is nothing like that. Okay. Nothing like that at all. So we have nothing to worry about. And there's some really great reasons for Florida. The rest of the world, the rest of the US may not seem things as brightly as we do. But for Florida, let's share some really great things. First of all, let's look at the single family home trends. They are looking up and up and up. And the reason is look at the median sales price, right? When the market tanks, look what happened. It's taken a while for them to come back, right? Look how long it took it to actually get back to the 2006 point. It took several years to come back, but then it shot straight up, right? But they're not dropping. So people who think, oh, okay, no problem, those prices are just going to tank again, they're not. And there's a couple reasons why. The most important reason was when this happened here, what also happened? Mortgages were being given and handed out like candy. You didn't have to qualify. We called it the foggy mirror. You were breathing, you got a mortgage, right? Anybody got one. Did you want one? Here you go. Are you 5? No problem. You can't pay? No big deal. Can you pay a penny? You're good. Okay. It was pick a pay, right? Like it was ridiculous. We all remember the pick a pay loans, right? Well, you could pay like a 30-year, you could pay like a 15-year, or you could just pay interest free. We'll just qualify you on that one. It's like $5. Yes, and it'll be negative amortization and your loan will grow, but you'll be okay because you'll sell it, right? And make so much money. It was ridiculous, right? And then what happened was after the market tanked and many companies went out of business and then the banks had to get, obviously bailed out and all this craziness happened, the mortgage rates were all down here, how many mortgages they were giving out. And they've stayed there because the banks realized we can't give loans to just anybody. You actually have to qualify. Oh, that was a great idea, right? So this is what has saved us. People today, first of all, who are getting loans actually qualify. Oh my God, amazing. So number one, we have very, very qualified buyers. Number two, if you look through the market, and I look at the market all the time, between 20 and 35% of our market is cash. Okay, So this is another thing. It's not like people bought and the prices are going to suddenly drop and now everybody's going to go, and foreclose on their home. That's not going to happen, because if they do, 5 other people are going to buy their house, right? So we still have what is called a shortage. So this is his explanation that I loved. Why do we have a recession? Does anybody want to guess where this came from? And it was very funny. First, he started with the gas prices and he said, who wants to blame? Who thinks what the gas prices are about? And so people started yelling out things. Some people said Putin, right? Some people said Biden. Some people said Trump. Some people said all these names, right? He said, well, how about we say COVID? Because what happened was we shut the country down. And what that did was that we were used to people going places, taking planes, driving cars, right? All this stuff. So we would be producing gas, right? And then when people stopped going places, they stopped producing, right? Because they didn't want to keep making gas. So they stopped because they didn't want to stockpile it, right? And then what happened was people were so pent up waiting to get out that when they opened some stuff up, they're like, let me out. He's like, I hate them all. I just kept going to the mall. I didn't care. I just wanted to get out. And that's what happened. So he called it pent up demand times 2. People started going everywhere. Suddenly there's this huge demand for gas. And now the gas companies couldn't keep up. The other problem was, Putin thing, that maybe put some demand on it. Yeah, maybe the fact that they're trying to go to, the fact that they're trying to go to electric. Now you have the little gas companies that would put the mines in the ground, that to drill a new mine is millions of dollars. And now they're like, well, what if they shut that down next year? Do I really want to put a new mine in the ground? Maybe I won't. So maybe they're not building up as quickly as they would, right? So maybe that's not as quick a resupply of gas. Maybe that's slowed down. Maybe that's increase the prices a little, but the truth is it's just supply and demand. We just have way too much demand and just not enough supply. So that's what's causing this. Now, the Fed usually would raise the interest rates to cause this, right? But truly, they didn't even have to get there because the demand is so high for everything. Why do we have a problem with a shortage of all sorts of supplies? Because people went out and bought everything. So what happened was economics changed. People used to build refrigerators and microwaves and all this stuff and keep it in warehouses, right? And they would keep it there until people would order it. Well, they stopped doing that back in the 80s and they called it, they would make it when you ordered it, right? Well, maybe you had to wait 2 days because you wanted the pink one, but it was okay. Well, what happens when they stopped ordering it? They stopped making it. So now you had another thing when people were ordering that they didn't have enough supply of other things. So now add that to our labor shortage. Now we don't have enough people to make things. Why don't we have a labor shortage? Well, we started paying people not to work. That was a problem, right? So all of this became an issue because truly supply and demand. That is where we are. So now we just have to recover, which is going to just take a little while. That is what, so he is saying what's great for Florida is, guess what? We still have everybody here. Our unemployment compared to, look at this. This is US, what they anticipate is going to happen to the US in unemployment. This is Florida. We're not going to be affected near like anybody else. This is one of the reasons we have the parks. We have people coming. We have an economy that's booming. And not only do you guys know that Universal is doubling in size, right? So maybe Disney is choosing to wait till 2026 to come. Universal has Epic Universal doubling in size, but they are also pledging 20 acres to be used for 1,000 units of affordable housing and mixed income. Did you guys know that? They have pledged tuition-free preschool, on-site medical offices, transportation centers for ride sharing and employer shuttles, and 16,000 square feet of mixed type of retail spaces. Now, Disney's also pledged 1,300 units, but they won't give us any information. But you see, with all of this, it's giving us more growth in our economy, right? And then what else do we have? Our population is continuing to rise. Why? Because people want to move here. That's the beautiful thing. So in 2021, 59.3 million visitors came to Orlando. That's a 68.1% growth since 2020. And they're anticipating that in 2024, 80 million people are going to come. So is that going to slow us down? No. So what Mr. Snaith is saying, Sean Snaith is saying, we're going to have a possible recession. It's going to be about a year. It's going to be slow. He says probably Florida's going to get the least amount of it because we have so many people moving here. We have so many people visiting here. We have so much economic growth here. We have so many companies coming here. So for us, what does that mean? It might not be business as usual, but it's going to be business. And it's going to be for us better business because companies that don't know how to go out and find customers, companies that don't know how to go out and get the right exposure to find buyers, companies that don't really know how to work networks, how are they going to be able to do it? They're not. So what are they going to have to do? Customers are going to have to go to the best. That's you. So I think this is going to be a beautiful thing for Sotheby's agents. So congratulations. This is going to be a wonderful year. Get ready for a fabulous ride. Yes?
Not only that, I think they're coming, there's a lot of people that are coming here are coming from states and cities that very expensive to live in. When you've had a house for
Yeah.
30, 40, 50 years and see what you're gonna get for it and what you can get out here. Once you sell that. and still have money in
Absolutely.
your pocket,
Recording is progress.
Okay. Yes.
They're like, it's a no-brainer. Yeah. We've got a lot of people that, I mean, even with, American, get a lot of transfers from like Chicago, California, New York. They come
Absolutely.
here, they've sold what they, so it's not worth it anymore to have no backyard, you know, everything concrete, unless you live outside of the city. They sell there and come here and buy it.
Absolutely. We are still going to be having people from all over come here, and it's going to continue. And as their markets tighten, our market is growing, and that's a huge advantage. Yes.
Carrie, yesterday I was on a great global conference call with the top luxury agents from around the country in key markets. And we had a discussion about market changes and shifts in each individual market. Something for everyone to keep in mind. It did not matter whether it was Hilton Head in South Carolina, whether it was DC, Turks Caicos, California, or here in Orlando Metro. When we were pulling our numbers and getting a bird's eye view, we're performing almost identical to 2019 and 2020, which were not bad years in the market.
At all.
2021 was just a complete outlier. So when people are using these buzzwords for clickbait in advertising and news, talking about, drops 20%, 30%, that's because we were up 20 and 30% year over year. It was an astronomical year. So it's really important. I know Bud Husky spoke to this at the Breakers for Premier Agents too. It's important to get perspective and get a bird's eye view on what we're really talking to and have clarity with how we're teaching and educating our buyers and sellers on what's actually really happening. And more than a shift or a recession, it's really just a rebalancing. So I think it's really important to know your numbers. I pulled the numbers on Winter Park, 32789, anything over $1 million. And the performance is great. And we have to understand too, summer is a natural slow market in the state of Florida. People are going back to school. People don't typically buy here when it's hot. They're on vacation in Europe or North Carolina, right? So I think it's really important to get perspective and not let the fear mongering take over your marketing or your messaging.
Absolutely. And the point about the possible recession, that type of thing, that's the economy, not the housing market. Let's make sure there's a differential there. And let's make sure we understand that the differential of that is not even really necessarily with our Florida market, which is the point that he was making, right? Because our population is growing, our economy is growing, and we have the opportunity of more people moving here than anywhere else. So with that point going on, yes, other parts of the nation may see slowdowns and other things. So we need to be very cognizant of that. But we also need to understand they need to go somewhere, and where are they going to go is here. And to your point, our market is rebalancing because it had to. Because you cannot continue at that ridiculous rate of multiple offers, prices going through the roof. That was just unrealistic. Absolutely. Not to mention, it wasn't a healthy market. It just wasn't a healthy. We had so much disproportionate supply and demand within the housing market. It was just not healthy. So to my point and yours combined, I think that our growth within our real estate market is going to continue at a very healthy rate. It's just going to be more normalized in the sense of there will be buyers, there will be sellers, there may be multiple offers, there just won't be 50.
And there shouldn't be.
And there shouldn't be 50, absolutely. And more importantly, we will have to market because we should.
Yes.
And we will have to find the buyers because that's our job. Okay, so this is the thing. And we need to understand and use to our benefit the fact that the nation as a whole will see compression in their employment. Where are they going to move? Here. That's the beautiful thing, because where are the jobs going to come? Here, because our economy is growing. You know, we know huge companies are opening up here and actually moving here because we have wonderful economy, but also tax benefits. We are giving huge tax benefits. Our economic partner has partnered with Visit Orlando. So the economic global partner has partnered with Visit Orlando. They have a huge new slogan, and they're telling us that one of the top 4 companies is coming here. They have not told us who. In my next board meeting, I will tell you who, because I don't know yet, but they're opening a huge company here. That's huge for us. Guys, we have got a huge move. I'm not allowed to tell you who, it's top secret, but we're moving 2,000 families here. I mean, this is exciting stuff. There's amazing things happening, but it's going to be normalized growth. It's not going to be 50 multiple offers, and we're thankful for that.
Which is a welcome change.
Which is a welcome change, but it's also going to help you tell the sellers what you should be doing, why they should list with you, what your value proposition is, right? That's the beautiful thing. And you need to understand, when we talk about market shift review, these are things we need to understand. What's happening within the market, what's happening within the economy, why it's not affecting us here, or how it is affecting us here. You know, it is affecting us here because our population growth is increasing. We know that, right? This is a huge thing. So this is exciting. And one last thing I do want to share, it is coming to a vote. They're talking about rent control. And I think we're going to vote it down. I really do. Believe it's going to be voted down because it doesn't make any sense at all. And so far, the votes are looking towards voting it down. They were talking about it with the Orange County as well. I know, you're like, what? It's actually against Florida's guidelines to have rent control. However, they're bringing it to a vote to allow for rent control. But so far, it's skewed against that. And it should be. I'm from New York. Rent control does not work. It creates slumlord. It's just a mess. It doesn't help anybody. We understand we have a need. We need more housing. We need more affordable housing, which is why Universal's doing this, which is why Disney's doing this. We are going to come up. Maybe we're going to do more things with entitlements that allow for things. Maybe we're going to do more things with impact fees. Maybe there are things that they're going to try to be doing. Maybe hopefully they're trying to talk about making the permitting process much quicker. They should. It's ridiculous. So I know Orange County is focused on this. This is another thing that came up during I went to the Orange County meeting, which was great. So they're focused on changing these things. How quickly, Lord knows, but it is something that has been brought to the forefront. But I do not believe that the rent control will pass. That's bad for us. We all know that, because if you're an investor, the last thing you want to hear is your investment is now turned rent control and you can't, I mean, what are you going to do with that now? Right? You have to go to the people who are tenants and ask them if you can increase the rent. And then who's going to buy that from you? You can no longer sell that because who's going to want to buy this? Yes.
Karen, I think one thing I think would an opportunity here too is to get some of these renters back into the buying market, because so many of them got turned off because of all the multiple offers. And when they go to look at a house, it might be at the top of there, but they don't have $30,000 extra to make an offer.
Right.
Excellent. And another point that we could go to them with is the Home Hero.
Hometown Hero.
Hometown Hero program.
Yes.
Yeah. So that's another thing that we could be talking about. Absolutely. And we should, because rental rates in December went up 10% and they continue to climb. And without rental controls, they can climb, at will, right? That's the whole point. but they should, because there should not be rental controls. However, the market should control that, right? Because why would anyone want to live in a property like that? But unfortunately, because there is no property, that's been the problem. So I agree with you. We need to maybe do some messaging to people to say, why would you rent here when you can now buy with down payment assistance? It's totally true. So this could be some great other types of messaging that you could do to help people. It's just, what properties do we have available that they can buy in? These are things that you'd have to put a property with the program, right? Because if the home is a certain price point, they may not qualify, right? So that's what we have to talk about. But great point. Thank you for sharing that, April. That was awesome. So I hope you guys all got something from this. The whole point, I think, of what Snaith was saying is really very positive. You could call it whatever you want. I think the possible thing is hysterical and true. It doesn't matter what you call it. You could call it rebalance. It doesn't matter what you call it. What you call it here in Florida is just slow growth. That's what it's called. It's just more normalized growth. And we just need to be cognizant of what's happening everywhere, because guess what that means to us? More people moving here, right? Because as they lose jobs elsewhere, they're going to be more apt to move.
It's getting rates in control. So rates are going rapid. So the
Right.
recession is needed.
Well, yeah, it will control our rates and things like that. It's going to control and it's going to normalize things. But more importantly, I think it's going to bring more people to Florida, right? Because people are going to say, okay, well, I was going to move in 2 years. Maybe I'll just move now, right? So get ready. It's going to be some fun, but it's not going to be crazy. It's just going to be good old fashioned real estate. So just be ready for some actual marketing, actual exposure, actual prospecting, the stuff that we really got into real estate for, right? That's the good stuff. All right. So I want to say happy birthday to Christina Costa, Art Fisher, and Miss Jill Raines. Woo! All right. And here's some of our numbers. So for July, for Southeast Orlando, Lake Nona, and Ocala, we had 21 million in listings. Woo! Congratulations to Tasha, Stacy, Luciana, Susan, Seda, Wendy, Barbara Ashley Jones, Tina, and Fran. Woo! And for Lake Nona and Ocala, for new sales, 11.2 million. Woo! Congratulations, Luciana, Tasha, Stacy, Seda, Wendy, Tina, Barbara, and Susan. Woo! And so Lake Nona and Ocala closed sales, 12.5 million. Woo! Miss Tasha, Stacy, Karen Brooks, Miranda Katie, Fran Goldfuss, Alex Goldfuss, Shane Carson, Priscilla Vasquez, Magdali Sotapesa, Tina, and Susan. Woo! Did I have one? Okay, for Dr. Phillips and Claremont, July listings, 19.3 million. Woo! Miss Dawn Giacchetti has been on a crazy roll. Congratulations, Dawn and Carrie and Marilene and Janet and Janice and Daniel and Chris and Julie and Ash and Bruno and Susie and Jules, Alistair and Pippa, Linda, Janet, Mark, Teresa, Carol, April, Kelly, and Wendy. Woo! For Dr. Phillips and Claremont, July new sales, 24.7 million. Woo! Congratulations, Dawn, Janice and Janet, Carol, Ash, Brianne and Angie, Alistair, Pippa, Nick, Marilene, Jules, Daniel, Jules and Chris and Julie, Teresa, April, Luce, Carrie, Bruno and Susie, Linda, Janet, and Mark. Woo, good job, Linda. And closed sales, 25.4 million. Woo! It's a long slide. Let me breathe. Dawn, Val, Tammy, Daniel, Janet and Janice, Carol, Luce, Jules, Tammy Schuster, Teresa, Chris and Julie, Gordon, Emily, Marilene, Linda Fu, Brianne, Raj, Janet, Mark, Alistair and Pippa, April and Kelly, Carrie, Lynn Lou, Maria de Gallego, Wendy, Elsie, Benjamin, and Andrea. Woo! Great job, guys. I wanted to remind you to save the date. Please register for our next event at the Al Fondin in Winter Park. We're having a breakfast at 8:30 and the networking, and then we start at 9:30 to noon. And that is on the 20th. What day is that? Did I not put it on there?
September 22nd?
I think it's September September 20th. Thank you, Leonie. I made it look so pretty. I took off the date. Please register. It came out yesterday. So we definitely hope you'll be there. We're going to have some really great things. This is our road show. You're going to meet Kathy Forrester, our new Chief Marketing Officer. She's awesome. You guys are going to love her. She's going to bring some really great stuff. I'd like to also introduce to you, I'm going to stop my share. Where's Miss Robin? Can you come on, Robin? There's Miss Robin Bartlett. She's our newest wonderful addition to our team, and Dr. Phillips. She is a wonderful breath of fresh air. She's very techie, so if you need help with anything, she's just as techie as I am, for sure. And you're going to be seeing some new changes. We're coming in. This is going to be your team 2.0. We've got lots of new stuff coming for you. I'll give you a little hint. We've got some new open house pack stuff starting. I'll share that on our next meeting. But when you have an open house, we're going to have stuff ready for you to go. Should I tell them? Should I tell them? Okay, I'll tell you, because I can't keep anything in. I'm like a kid in the candy shop. I just can't hold it in. When you get an open house, we're not quite done because I'm waiting on the social post. But as soon as you register an open house with us, we're going to create your flyer for you. We'll print it for you out. And then we're going to have your social post, your Facebook and your Instagram post. We'll share it on our page, and we'll also send it to you so you can share yours. And we'll also have an e-blast ready for you to go. So that will be all set for you as soon as you ask us to go ahead and put it in the MLS. Now, if you're up in Ocala, we'll probably not print out yours because you probably won't take it. So we'll probably send you the flyer. But, and if anybody has any other requests or thoughts or anything you'd like us to do, we're happy to. You'll be seeing from us every week some new emails about all of our listings as they're coming live. So you'll be knowing what the team is doing. And we're going to be sending all sorts of new stuff out to you every week. So if you have any requests or anything you'd like, let us know. And there'll be some new changes, more changes to come that you hopefully will love. But at any rate, anybody has anything to share? Okay, well then I wish you all a wonderful day, and I will look forward to seeing you on training hopefully on Monday. So have a good one, guys.
Bye, everybody.
Thanks for coming.